Hello there. Today let's learn how to mind map IAS 17. Leases. IAS 17 gives guidance on accounting for finance lease by lessee and lessor, operating lease by lessee and lessor, and sale and leaseback transactions, which results in either finance lease or operating lease. There are accounting treatment for manufacturer dealer lessor. Accounting for finance lease for lessee and for lessor. For lessee, in finance lease substantially all the risks and rewards of ownership are transferred to lessee by lessor. Lessee records assets and liabilities in financial statements. Add lower of, fair value and present value of lease payments. For subsequent measurement, apportion lease payments as finance charge and reduction in liability. For lessor, in finance lease the lessor does not record the leased asset in its financial statements, as it has transferred the risks and reward. Instead, he records the amount as receivable. Receivable is described as net investment, which is equal to fair value plus initial direct cost. For subsequent measurement, record payments received during the year. Record finance income. Accounting for operating lease for lessee and for lessor. For lessee, the lessee does not record the leased asset in its financial statements. Instead, lessee records the rental payments as expense on straight-line basis over the lease term. For lessor, the lessor records the leased asset in its financial statement, as he has not transferred the risk and reward of ownership. At commencement the lessor adds initial direct costs incurred by lessor. Subsequent measurement. Lessor records the depreciation expense. The policy must be consistent with lessor's policy. Account for any impairment loss. Records rental income on a straight-line basis over lease term. Accounting for manufacturer dealer lessor. A manufacturer or dealer often offers to customers the choice of either buying or leasing an asset. As these are lessors, therefore lessor's accounting treatment are applied. This may result in either finance lease or operating lease. Finance lease. A finance lease gives rise to two types of income. Profit or loss, which is the difference between sales and cost. Finance income. Operating lease. The manufacturer dealer lessor does not record sales. Record asset. Record depreciation. Record impairment. Record rental income. Sale and leaseback, which results in finance lease for lessee and for lessor. For lessee, sale of asset and leaseback of asset. Sale of asset. Lessee should remove the asset from its financial statements. Defer and amortize any surplus, gain over lease term. If loss arises, then immediately recognize it. Leaseback of asset. Recognize asset under finance lease. Create an obligation under finance lease. Depreciate asset and amortize liability subsequently. For lessor, purchase of asset. Lessor does not record the asset, as the asset is not transferred physically nor risk and reward are. Leases the asset. Record lessee is receivable. Record lease receipts during the period. Record finance income. Sale and leaseback, which results in operating lease for lessee and for lessor. For lessee, sale of asset. Remove asset from financial statements. Record gain, loss, where sale at fair value, gain, loss is recognized immediately on disposal. Sale at less than fair value, gain, loss is recognized immediately on disposal, if lease payments are not compensated at below market price. If not so, any loss is deferred over expected use of asset. Sale at more than fair value. Normal gain, loss, which is fair value minus carrying amount, is recognized immediately. Excess profit, which is actual sale minus fair value, is deferred and amortized over expected use of asset. Leaseback of asset. Record normal rental payments as expense. For lessor. Purchase of asset. The lessor records the leased asset in its financial statement. Subsequent measurement. Lessor records the depreciation expense. The policy must be consistent with lessor's policy. Account for any impairment loss. Leases the asset. At commencement, the lessor add initial direct costs incurred by lessor. Records rental income on a straight line basis over lease term. Thanks for watching. More stuff coming soon.